Welcome to today's Explainer. We're diving into an absolutely fascinating guide called 10 Essential Skills for Profitable COT and CME Trading. Now think about this for a second. Every single week, the CFTC and the CME group drop what is essentially a goldmine of market data. But look, there's a massive difference between just having access to that raw public data and actually possessing the skill to extract profitable meaning from it, right? That's what we're tackling today. We're going to bridge that gap and transform those raw numbers into a clear, actionable trading edge. Let's get right into it. Okay, let's dive into our roadmap for today. We'll be covering the data-driven edge, building the trade foundation, calculating market extremes, mapping the market footprint, your 12-month mastery plan, and finally, the pre-trade checklist. Kicking things off with part 1, the data-driven edge, and the crucial difference between simple information and actual profit. So here's the real secret to trading. It isn't just having access to those free CFTC and CME reports. Literally anyone can pull those up. That's just public information. And honestly, it usually just leaves retail traders completely overwhelmed by a sea of raw numbers. Or, they just ignore them entirely because it's too much. The true edge, the path that actually leads to profit, is knowing exactly how to systematically apply this data to extract meaning. It's about anticipating market behavior before it even happens. You really have to adopt the mindset of a successful institutional trader. They treat this data as their absolute ultimate advantage, completely decoding the who, the where, and the when of the market. Moving on to Section 2, Building the Trade Foundation. Let's look at the first 3 essential skills you absolutely need. You wouldn't build a house without a solid foundation, right? Well, you definitely can't trade this system without mastering your very first essential skill, which is decoding the COT report to figure out exactly who is doing what. The guide uses this brilliantly simple casino analogy to break down the 2 major players you need to keep your eyes on. First up, we've got managed money. Think of them as the really eager casino players. These are the speculative hedge funds and the trend followers who are aggressively betting on where the price is headed. On the flip side, we have the swap dealers. These are the massive banks, and they essentially act as the house. They aren't out there speculating. They're just absorbing the risk from the players and intermediating the market. If you can figure out what the house is doing and what the big players are doing, you instantly give yourself a massive advantage. Okay, so how do we actually track these guys? It's all about establishing a really simple, beginner-friendly weekly routine. Step 1, every single Friday, just go ahead and download the COT report. Step 2, calculate the net position for those key players we just talked about. It's super easy. Just take their long contracts and subtract their short contracts. And step 3, compare this week's net position to the prior week's direction. Are the hedge funds getting way more bullish? Are the banks suddenly building a massive short position? By just doing this 3-step routine every Friday, you'll figure out exactly what the big money is up to. Combine that with tracking open interest as the market's fuel gauge, and you've got yourself a rock-solid directional bias. Which brings us to Section 3, calculating market extremes using the COT index. Now, knowing the direction the market is heading is great, for sure. But knowing when a trend is completely exhausted, when it's stretched to a dangerous extreme, that is where the real magic happens. To find that out, we calculate the COT index. And don't worry, it's just basic arithmetic. You take the current managed money net long position, subtract the 3-year minimum, divide all of that by the 3-year range, and multiply it by 100. That might sound like a mouthful, but all it really does is normalize all that wild, chaotic market data onto a beautifully simple, easy-to-read scale from 0 to 100. It's literally just like checking the fuel gauge on your car. So what do you actually do with that 0 to 100 number once you have it? Well, these index extremes become your ultimate contrarian warning signs. Let's say your calculated COT index pops above 80. That screams extreme optimism. It means the market is overbought, the crowd is getting way too greedy, and your mindset should immediately shift to bearish, looking strictly for short setups. On the flip side, if that index tanks below 20, you're looking at extreme pessimism. The market is totally washed out, and you should be hunting for bullish, long-only setups. Following this simple rule keeps you from doing what so many do, buying the absolute top or selling the absolute bottom. All right, Section 4, mapping the market footprint with the CME volume profile. Those weekly reports we just covered, they give us the who and the what. But to actually get in there and execute a trade, we desperately need the where. We've got to shift gears from weekly data to daily trading tools. Enter the volume profile. This is a daily charting tool that shows you exactly how much volume was traded at each specific price level. I love to think of this as a highly detailed, delightful little trail of breadcrumbs. It's the literal footprint left behind by the massive institutions, showing us exactly where they decided to step in and either accept or reject value. The real trick here is setting up your daily routine to mark these key metrics on your charts. You've got your point of control, or the POC, which is simply the absolute highest volume node. But the real magic? That happens at the boundaries. I'm talking about the value area high, or VAH, and the value area low, or VAL. These essentially bracket the upper and lower bounds where 70% of the trading volume happened. You want to mark these highs and lows every single day. Why? Because if you have a bullish COT signal, you want to spot those institutional footprints and look for entries near the value area low. You're buying at a massive discount. And if you're bearish, you wait for the price to hit that value area high so you can sell at a total premium. Let's zoom out a bit for Section 5, your 12-month mastery plan. This is your path to consistent profit. The source material is incredibly clear on this point. You simply cannot master all 10 of these essential skills overnight. You really need a structured 12-month path. Months 1 through 3 are purely about building your foundation. That means getting comfortable reading the COT report, finding those extremes, and tracking open interest. Seriously, do not rush this part. Once you're ready, months 4 through 6 are where you layer in tracking the swap dealers and mapping the daily volume profile. Then, in months 7 through 9, you bring in timing elements like order flow and seasonality. And did you notice how complex risk management is saved specifically for months 10 through 12? That's intentional. You have to focus entirely on building that rock-solid foundation before you ever attempt to mess around with complex risk models. It's all about digestible, bite-sized progression.
Finally, Section 6, the pre-trade checklist. How to verify your edge live in the markets.
So how do you make sure you're actually using all these skills properly in the heat of the moment? You use a strict, non-negotiable checklist to prevent yourself from trading on pure emotion. Right before you ever click buy or sell, ask yourself, have you identified a COT extreme? Yes or no? Is open interest actively confirming the trend? Are the swap dealers, the house, actually moving with your trade? Is the price sitting at a high probability volume area? And finally, is your real-time order flow trigger present? This checklist needs to be your psychological anchor. Run through it every single time, and it completely takes the dangerous guesswork right out of your execution. And that brings us to our final thought for today's explainer. Think about this. The market will always be there, but will you have the edge? This massive goldmine of data is published every single week, just sitting there waiting for someone to decode it. Well, now you've got the framework to start your 12-month journey. You can stop guessing and start systematically extracting real profit from raw information. The only question left is, are you ready to put in the work? Thanks so much for joining me today, and I'll see you next time.